Hello. Welcome in, everybody. Hope everyone is well today. Get the camera on. Here we go. We're back again for another live session. This one probably focused a bit more towards analysis because the markets are a little bit strange today. Regardless, let's have a look at chat. Kyoto. Hi James, looking forward to the stream. Appreciate that. Hope we're doing well. Gravel X, how you getting on, mate? Hope you're okay. Yeah, all good. Slow morning, not really much going on at all. Obviously, I sent out this analysis into the VIP chat, and price has reacted to this zone, and then after the reaction, we've seen it come to mitigate into this last sell before taking off higher, hoping to trade that up or see price trade up into there. But like I said, there's not many opportunities really presenting themselves today. The market's across the board and amazing. In all fairness, I think because of what's happened this week with the volatility we saw introduced Wednesday, Thursday, it's probably more of like a recovery day in the markets than anything else, which is fine because LAGFX as a whole has made some nice returns this week, so absolutely no stress whatsoever about trying to find new entries. This was my previous analysis on this market this morning that we did. Never got the tap, never got the ping in this region. Obviously we can see price breaking down now, and now redoing some analysis. Could we potentially see price reacting to this last buy to sell? Let's have a look inside of that and see exactly what price is saying. Quite nice. There is a decent liquidity grab there, where we see a nice high volume push through and then some market inefficiency below. Ben Harmon, you're right, finished work at 12, so I can join you for the slide. Perfect, Ben, perfect. As you're here, actually, I can go through that concept that we were speaking about on Telegram. It was about inefficiencies above on higher time frames and how we can understand what's happening. And then I was talking about, obviously, analysing the supply and demand balance. So we can get into that. May as well do so now, in all fairness. I mean, it should be able to be seen on any market, really. Let me think of a market that hasn't been too wild recently, which pretty much just gets rid of everything. Okay, I mean, we'll find something here. There's got to be some good region. Okay, yeah, I mean, this is a decently good example. So what I'm saying is that you were concerned that, let's say, I want a 4 hour just to feel this better. Let's say in this region, we were looking, and the price action here, let's just ignore the fact that all of this is there. And just imagine in this region, we actually saw something like this, and then we have huge inefficiencies there. And then we've seen price slowly trade up. Reverse at this point, we'd forget that this POI existed, and we'd say, right, so price hasn't actually come to mitigate. That was a very straight line. Price hasn't traded us up to mitigate the last buy to sell, and we have all of this inefficiency below up until where that high is created. So we get a different color there. This box represents market inefficiency. So we have this remaining, and price has come to break structure lower, and you're saying, okay, how can we assume that price is going to continue bearish because we have some inefficiency left that ideally we would like to see get mitigate? So the fact that we've already broken the structure means this is now the protected high. So in order for price to even want to come and mitigate this, it needs to break structure. It needs to break or displace the current trend, which price doesn't really like doing. It would rather follow the trend, following percentages. But I said a good way to analyze whether price is close or showing signs of wanting to disregard a trend is analyzing the supply and demand balance within it. So If we take this downtrend in here, for example, we're talking about the lower a lower low comes after surpassing the previous low, and the higher a retracement comes, it gives us a good gauge of the supply and demand balance. So we can see straight after we've tapped into something, reverse the market. This is where we've introduced the most possible supply. At this point right here, this is where the institutions have reversed the market and executed their large sell positions to profit from this move to the final target, which we're hoping was at this break of structure. So we see the very first impulsive wave comes extremely far down, and the correctional wave only comes that far back up. So the correctional wave is extremely shallow. Now if we compare this to the next, pop that over there, we compare this to the next impulsive wave, we come down, and then the retracement is slightly larger than what we've seen last time. On top of that, after the break of structure, we've created a new lower low that is this distance away from the previous low. So we're readily breaking the lows and doing so with a lot of high volume. Now if we compare the two of these, we can see that the retracement is much bigger. And now, because it is seeming like this trend's reversing, we understand that this is the next impulsive wave, which came to break this low. And we see the distance from this low to the bottom is slightly less than the distance between this low to this. So I know that's confusing, but when we're seeing large impulsive waves like we're seeing here, it's a good sign that supply is still dominant. We are surpassing the previous low by a lot, and then also our retracements are quite shallow. So in the scheme of this entire move, so from this to this, we use the fib, we can see that we've only just surpassed 50% of that impulsive wave. Now we could have had a retracement that came all the way up to trade us into this POI before going lower, and in that case, that retracement would indicate that there's a lot more demand in the market, because price has been able to move all the way up to like 90% of the previous impulsive wave. But what's actually happened is we've only come up about 50% of the way of the previous impulsive wave lower, which is a sign that there's not too much demand in the market. And then inside of this alone, so inside of this singular impulsive correction, impulse, we can then identify the supply and demand balance inside of that. So on our impulsive waves, we're seeing a lot of high volume bearish candles, especially here. Like this entire run is just so much supply in the market, it's all inefficiency. We can then also look inside of this, again, quite a lot of high volume sell candles, very few retracements inside of this. It's not like we've seen structure play out like this as it's coming down with some nice retracements inside. We've actually seen a straight drop and then very shallow retracements once again. So we can analyze all of this and use the information that's given to us from the supply and demand balance to determine if price is ready to reverse a larger scheme yet. And because, like I stated here, our correctional waves are still pretty shallow, we've only just started surpassing 50%. So if we put this onto this impulsive wave, so we failed to even breach 50% of the impulsive wave. This time round, we've just about breached 50%, but if we were, for example, to, let me just save 50%, and then we'll actually just revert the settings of this. I believe you can just revert them. Apply defaults. So we need 38.2, 61.8, 50%. Okay, so we don't actually need any of these now. I don't think we need 0. Is it 0 that's in the way there? No. Which one is it? What's this higher one? Must be the red one. Yeah, there we go. So for example, we can see that price sort of tapped into the 50 to 61%. So obviously Luke uses the fib, so he's more educated in what that means. But the point being, the higher up we come inside of this, so the further up we get inside of that impulsive wave. So here we're between the 50 and 62, so maybe like, I don't know, 56% of the way back up we've come. As we start going higher and higher and reaching a higher percentage of that impulsive wave, we know that more and more demand is being introduced. So let's draw that again, knowing that we've got about 56% there. In this one, we've come up to just under 36. I don't know how it highlighted that. Oh, I need to deactivate the touchpad. So we may expect, obviously I don't do this, this is just extremely broad predictions, but we may therefore expect that this next impulsive wave is more than likely going to come up to the same region, if not higher, than the previous one, because demand should slowly start getting introduced more and more, because as we go, we are exhausting supply. With each impulsive wave, we exhaust more supply. So we can see that price is more than likely going to come up somewhere higher in the impulsive wave, just because we understand that more and more demand is being introduced, because we can see visibly that the correctional waves are coming further and further up. We can also see again inside of this impulsive wave lower, the impulse size is not as big, and also we've not created a new lower low as far away from the previous one compared to previous. So that is one good way, which is pretty much just supply and demand analysis. Now, just because we had, or arguably had, inefficiency in this region above, I'm not going to instantly assume that price is just going to break all structure because it wants to fill that, because price has actually given us signs that it's ready to break down. So we don't need to worry about that. If price wanted to fill that inefficiency, it would have done so. The fact it hasn't done so now means it has no immediate worries about doing so in the immediate future. But like I said, in terms of this move lower, there is still quite a bit of supply. But the thing that worries me, and the reason why we're not looking to get on longer term short, is because we've just broken the previous low. So this now, wherever price goes from here, it could be setting a lower low. So the second we break that structure, price has a reason to reverse at any point. Like, yes, we can look to take sort of intraday trades down to intermediary final targets. However, we don't have any longer term final target to follow because we've already surpassed the previous low. So remember the other concept I was saying, which was using the GAN box, and if we were to take this, no, sorry, how is it? No, I remember now. It's from this point down to here. We arguably want to get involved in short positions in this structure in the upper 50%. We're already outside of that, but then inside of this region, again, we want to try and get involved in positions in the upper 50%. So moving down, side of this impulsive wave, obviously that being a 1 hour protected high. If we look at it on the 1 hour, these being my points of interest that I'm curious about, which were identified on the 15-minute. You can see here, last buy to sell, last buy to sell. Price gave us a displacement, which meant to me that price is now going to go bullish to put in a correctional wave, which is likely to come and mitigate one of the two zones here. So getting involved in buy positions until that point. Obviously, after I sent out my top down in the main chart, prices made a move higher, would trace back in, mitigate this position, and then come to break structure. So we've had that break. Now we take this as the next impulsive wave. We look inside of it and try to determine where inside of this is unmitigated. So for me, we have this nice sell candle right here that I would argue is unmitigated. So let's get an alert on here. I'm remembering what you told me, Ben. You can just do this for alerts, add alert. And then this zone, if we go down to a shorter time frame, potentially we see somewhere else that represents a zone. Or we get more of an insight. All of this has been mitigated. Potentially price comes back down here and mitigates this. Okay, so assuming we distribute here, it's quite a tough one. There's no obvious position where we potentially need to mitigate. I don't actually like the look of that one anymore. However, I do quite like the look of this. This one's definitely unmitigated. Okay. To be fair, there's quite a lot of inefficiency. I usually then go for the lowest one, which it appears we might have been correct the first time. This is the lowest possible and mitigated position. But then I do also quite like the looks of this inside here. I think those are the two zones that appear the most likely to me, just because this move comes to clear that low, which should have been protected after we put this high in. So we broke this level, so this became a higher high. This should have become a protected low. Price obviously broke structure here, so the institutions have come to manipulate the market slightly before then making another move higher. That's the reason why I like this zone here. And look inside of here, the thing that I like is this nice wicky candle where we have blown through the low and then instantly reversed, leaving a wick and having a high volume push up. So that is the reason why I like that. And also the reason why I like that zone. So we can leave our alerts. See if price now potentially trades us back down into those. Although it seems like it has just taken off again. We may not find these opportunities. Price may have enough demand to now trade us up into these zones that we're looking at to do so. It's not every time that either zone will have to be mitigated. As I say, we might just see a continuation. This could be seen as like a rally-based rally, and then we continue higher and then start protecting this low. We just have to see what price does. For now, we have an alert there. We can also set an alert at this level, just beneath. And we can wait to see what price does moving forward from that point. Euro to US, we can see price has blown through this zone here. Now, this is still unmitigated. As is potentially this zone up here. So we've obviously invalidated that zone. We don't need to worry about that one anymore. So we can just put that as a zone invalidation. We have displaced here, but in terms of this scheme, that is our current protected high in more fractal scheme, but this is currently our overall impulse. Okay, so we need to try and determine if price is wanting to actually protect this high, or if we are putting in a wider scheme retracement. If we are going to put in a wider scheme retracement, it'd be quite nice to see price clear this liquidity before coming and mitigating this zone or potentially this zone higher. The reason I like the idea of that happening is because the only one place it arguably would want to mitigate right now is potentially somewhere in this region. We've had a nice manipulation. Although this doesn't look like a nice zone to me. I mean, we'll find out very soon because price has just tapped in. I think it is potentially obviously the unrefined zone has been mitigated, like this move comes back to mitigate it, but we understood from the higher time frames that there is a lot of control in there, a lot of volume, so potentially this isn't a zone that I quite like the looks of, but potentially in there. That's the only thing I can find, and the fact I don't like the look of it. I'm probably not even going to draw it, which leads me to believe that price is more than likely going to come and disregard this high to give us a wider scheme retracement into one of these supply zones. I think if price was going to continue this sort of structure, we would have seen price mitigate this region But another thing I quite like here is it does show some nice institutional control, similar to the concepts we were talking about yesterday, Ben, where we've had this build-up of liquidity in this region, signifying to people that we're reacting to this level of supply. So even smart money traders are getting manipulated out of the market at this point, because if anybody had pending orders, they would have been seeing this, seeing price start to break down, trying to get in on shorts. So they could have been caught out by that move. We know they just built up liquidity, manipulated people out of the market. So potentially we can expect some volume to be introduced soon. We've seen a lot of volume to the upside. It's just determining when that volume to the downside is going to introduce itself. So just to make sure, does anybody have any questions at this point in time about either the Euro USD that we're looking at now, or back on the Australian dollar to the US dollar that we were previously just looking at? If you've got any questions, make sure to send them over. I'll just give a couple minutes before moving on. Doesn't seem like we have any questions, so I guess we can look to move on. Okay, yeah, no questions. I guess we will now move on with the analysis, if nobody has any pressing questions about it. Okay, so yeah, we've seen all of this liquidity get cleared, so we're showing signs that we are ready to start running some upside liquidity. We've obviously built this, cleared it, clearing all of these intermediary highs along the way. Now we need to try and determine where is price likely to be bullish to. And that's where these two zones come in. This is the zone to me that looks the best, because it is just so much inefficiency afterwards, very likely to be mitigated. However, with this zone, we can see the price does actually potentially come back up to mitigate it. So it's not a likely zone, but nonetheless, I think like if we had refined it, we can see this wick comes up. So we could refine that to like really up here, the last buys to sell. Although I do believe that won't be reacted to. Nonetheless, we have our alert set here. We'll see what happens and just play the waiting game. Now I did do some analysis actually on the Great British Pound to US dollar, which I forget I actually did it on the wrong market. It was on the Oanda market, and let's replay price back just to see. This was a trade we were looking at. I sent out this analysis. We got a partial at this high. Price never quite came to achieve the take profit before reversing lower, but we would have had a partial stop loss to entry. So I think here it was like a 2.5 RR. Oh no, way more than that, sorry. 4.5 RR we got away with, so still some nice returns on that one. And then from here, I'm pretty sure that price is just giving us a really unconfirmed bias. Yep. But that unconfirmed bias is overall bearish because we have now displaced the low. This is a prime example. Like, this market just has so much supply involved that every time I've really tried getting involved in correctional waves or buy positions, it just never does what I think it will do. Because it never trades high enough. Like, it never comes to mitigate all of these inefficient areas. So a prime example for you here, Ben, like obviously there's a lot of inefficiency in this region. I was making the assumption that price could potentially then trade us back up after we saw some displacements. Price is broken structure, so it's hard for us to assume that price is now just going to trade us back up because we are still following bearishness, which could be a great sign that probably wanting to get in on shorts. However, going back to some of the concepts we were last talking about, obviously this being a correctional wave, this being the next impulse, we've only created a new lower low that's ever so slightly lower, and therefore it could be a great indication that supply is running thin, and then also on our pushes higher, price is coming to give us quite a deep mitigation, so it's signs that more demand's entering, supply is getting exhausted, so potentially we could see a big accumulation in this region and then a move higher, but we obviously just have to wait for any major displacements to happen. But looking inside of these regions, obviously all of this has been mitigated. There's no areas that we can look to buy from, arguably, other than potentially this region down here. After that displacement, that's making an early assumption that we are going to see an accumulation here, which could make sense. Obviously we have like a selling climax, an automatic rally, a secondary test, a sign of strength, come down for another test, we come back up showing signs that there is quite a bit of demand, we're struggling to stay lower, and then we see some nice high volume pushes back through, clear all liquidity that's been built up in this region. We've had a fractal displacement, but ideally in the scheme of things we want to see the displacement of this high, but because there's not really anything to get mitigated in this region, I'm going to assume that we are just going to run this liquidity, so potentially going to see this break of structure or displacement, should we say. If so, going to make the assumption then that price will start to trade as bullish, and then next week we can look to initiate some longs up into this region, where we can then potentially look to go short again. Although this market does seem very unconfirmed, a lot of rejection, a lot of confluence and biases all the time, so we would be quite cautious when it comes to trading that. I'm not sure if I sent this analysis out. I think I did. Let me just double check. Yep, gold. This came to hit take profit. Not something I placed, but we saw price tap in and mitigate this zone. I think when I sent it out, we were maybe like at this region where we had seen some sort of reaction and rejection from the zone, but obviously price has come to trade us all the way down, surpassing the low, and has taken off. So we could have arguably had that take profit at longer term points of interest. If we just zoom out quickly, if it's even going to let me, we could see potentially price come all the way down to some of the liquidity lows, or I mean even all the way down here. So that was a nice trade we potentially could have caught. Obviously the original or fractal final target was achieved, but we could have had that take profit even lower had we wanted to catch a wider scheme move. Sorry, just have to reply to a text. Okay, we're all good. We're all good. Right. That is gold. Good stuff. Any questions as of current, just to make sure, I like to just make sure that nobody is left confused or anything like that before we do move on from anything. So that's that. Any other markets? Ones that we haven't taken a look at is the euro to Aussie to the pound to Aussie. How come you didn't get to enter that gold trade? When I came to it, price had already reacted. Obviously we can see it happened at 3 AM in the morning. I don't use pending alerts, so I didn't have a pending order waiting. What time did I send the analysis through? Let me have a look. Yeah, it was about 11 o'clock. Yeah, the time is right on this. So I sent it through around about this region. And there wasn't, after we like had the reversal, there wasn't really any confirmation for us to get in. There's no like obvious positions that are getting mitigated until sort of like this region where we potentially come to mitigate. This is more tradable structure, but by that point we're already you know, halfway through the position, so it's pointless. I don't like entering gold anyway. I don't really like trading it because you can see like the mitigations are just vile. I don't know how else to explain it, but it's so hard to get entry confirmation because, like, I mean, just look at this. We've had the tap there, showed signs of reversing where we may have got in anyway, and then we tap into this. At that point, the protected low should have been this. So we have a displacement. Price doesn't really even trade us back into a point of interest. We then start making moves lower to put in a new low. Again, price trades up. Does it really tap into a point of interest? Let's take a look. Not really. Like, it comes back up. I wouldn't even want that to be the one that tapped. I'd want this one to be the one that gets tapped because this move mitigates that. This move's left unmitigated. And then we start to move lower. Potentially, actually, an entry here. I would have been looking at this zone. Does price tap us? Yeah, we get a nice tap. Volume's introduced. We then break the low. We could then look inside. And I probably would have said that I'd want to see this zone mitigated. Or if we want to continue more fractal structure, again, yeah, okay, potentially there. We potentially could have had an entry there. Down zoom out. See how price plays. When we pass the low, see, again, we thought there was a tap. I bet it now goes to continue lower. Yep. How do we get involved in that? Unless we had quite a lenient stop. Or maybe that's how you have to trade gold. Maybe you have to just add a few pips on top. And then from here, looking inside, I'd probably want price if it was going to mitigate anywhere. I think this wick actually taps us in to mitigate that. That mitigates that. So potentially somewhere inside of this wick. That is not a rectangle tool. I think that should mitigate that. So this is probably the best region to look at. No full tap. Did I fully identify the bottom of that yet? No full tap. How do we enter there? Potentially an entry on this wick here. Let's see if price ever taps us in. Nope. And then continue lower. So it's just so difficult to find entries on this market because the price action on it is just vile. There was one singular entry in this entire move that I might have been able to trade, and that was there. But every other impulsive wave or every other time I tried to find opportunity, none was really presented that was tradable. If you just give me one moment. And then moving forward from this, potentially we could have looked at this as like a drop-based drop. Say arguably somewhere in here needs to be mitigated. Does price trade us back up at all? Low volume potentially. No, we just drop again with high volume. So that is not a valid entry. To be fair, I may have identified this as a last buy to sell. I don't know if price will tap in. I don't know if price is going to reject from this region. Right from the bottom there. A slight tap, but does it even hold it? Nope. That's what I mean. Gold is just way too difficult to trade, I'm telling you. It just does not respect laws that well. I just struggle with it because I'm so used to trading like the major markets, and it just doesn't follow any of those sort of fundamental laws, or at least it hasn't recently. I've been able to catch some good trades in the past, but honestly, as of recently, it's just been such a difficult market to try and trade. And the price action that we see from it is always like that, where it's just so difficult to try and find an entry because we never get any real mitigation. So the funny thing is, it might be funny for you all to see as well, is the gas in my office chair is, it's gas, right? It's obviously, because I've had this chair for a long time, so you can obviously lift the chairs up and down, and obviously I'm guessing it's the pressure of the gas that holds it in place, but it's run out, or whatever the terminology is for when it stops working. So every now and then, like every few days, I'll be sat here, so I'll have it at its highest position, right, example, up here, and then I'll just be sat, I'll be working, and what'll happen is you'll see me, and I'll just slowly, well, it doesn't go that fast actually, that's quite unrealistic, but it'll slowly just bring me down, and because it's that slow, I don't even realise it's happening, and then I notice, I'm like, why do I feel really short all of a sudden? Anyway, enough waffling about weird stuff like that. Let's just have a gander, see how these are playing out. Yeah, prices now continue higher. There's surely nothing in this region that's going to mitigate, so I think it has to at least break this structure, whether it comes to then mitigate this zone or whether it invalidates us completely. I'm unsure. But here, this could have been a nice trade. I should probably update the VIP chat on this. I believe price was sort of like in this region when I sent out the analysis. Has since come down to mitigate this last sell to buy, and then we've obviously continued much higher. Regardless, I think I wanted to then go and look at the pound to Australian before we got distracted. It's an hour. We did have some nice analysis that we were looking at. Again, price has given us a rather unconfirmed thing. Like, I would have thought that we did mitigate that in this move. Right there's, okay, to be fair, it does actually come and tap us into the exact last buy to sell candle, which does come and clear all of this liquidity. It's rare that we do see something like this, but fair enough, it has actually come to mitigate that fully. This didn't give us the full mitigation. I thought this would have been enough of a mitigation, but evidently not. So we could have actually taken this now. You know what, I'm going to redo my analysis completely here. So this now becomes an entire impulsive wave, because we're obviously following the larger scheme of things. But because, like we were saying before with the concepts, this retracement was so large, there doesn't seem to be a whole load of supply in the market at the moment and quite a lot of demand, so we may need some more manipulation before price follows what we want it to. I think it's due to the interest rates affecting gold, and also everyone taking their money out of investment to get liquid cash due to the panic. Definitely makes sense, 100%. Obviously there's a lot going on in the world with inflation, interest rates. I know pretty much every single major country that is related to, you know, like the financial markets has upped their interest rates. I know that America, England, or the UK, Australia, and Canada, everybody is upping their interest rates. And obviously when interest rates rise, typically we're going to see inflation do the same. So yeah, I mean, you're probably right, because this market is so heavily influenced by investing, and you know, we have to remember that a lot of the liquidity in gold is investments, and that's why I've always said gold has tendencies to just shoot down randomly, is because when we have some bad news, like you say at the moment, this isn't just one thing that's come out that's affected us for a couple of days. This is like something we understand is going on or happening in the future, so people are starting to pull away from it, which is therefore obviously starting to make it depreciate. And then once people start pulling out, we start to depreciate. People are then starting to look to go short, because we've started to show signs of that in the market, and then the institutions get involved, and next thing you know, the market is running down a fair bit. But anyway, back to what we're doing. I keep getting distracted massively. Great British Pound, Australian dollar. So saying, yeah, we could have taken this as an entire impulsive wave. Therefore, we would assume that this should be a final target. But let's obviously go to a higher time frame first to try and understand what's happening longer term. Okay. arguably, as of right now, this is our overall final target. Have you seen the whole thing with crypto? I don't know what you mean by that. You mean what, just all cryptos like? Well, I mean, cryptos have been quite mad. I mean, Shiba. Okay, I'm on the weekly time frame. This market, for example, was God knows how many percent down the other day. Shiba, like there was a massive hype, as we can see. Let's actually go to the 4 hour, sorry. Like this massive peak we had, and it was so hyped, and now we're literally all the way back down at the lowest points it's ever been at. Luna USD. Wow. Yeah. That's unfortunate to anybody who was invested in this market. Wow. That's insane. It even drops lower than, like, it's... What happened? What happened to it? That's insane. And in the space of, what, 1, 2, 3, 4, 5, 6, 7, in the space of a week. You know, and imagine people who were in at this point and it increased by... Does it tell you the percentage increase? Yeah? 1,677%. And then you hold it for that one last week, you come back, and you've lost your entire investment. That's insane. What even happened to that? Oh my god. And I was thinking this was bad enough. This is one I invested in quite a while ago. And I got into it around like this level. And I was looking through like all the stuff, researching into it, and it was very positive. I saw it take the pullback and then displacing higher. I thought we were in for a new bullish leg, but obviously all crypto, even Bitcoin at the moment, has disregarded all lows. So this should technically mean, in terms of the market, this is going to go much lower. So maybe we end up seeing the markets end up going that low again, that people think, oh, it's cheap, let's buy into it, and they start going higher again. But I mean, it just doesn't look promising at all. It's crazy. I'm curious as to what actually happened with this Luna USD, not crypto, because that is literally insane. Regardless what we're looking at. Yeah, we're saying that is a final target currently. Final target. Obviously we've just broken set low. So obviously we've had impulse correction. We want the next impulse to surpass the previous low. Inside of this wave, we've had impulse correction impulse. So taking this as the most previous, or the most recent, sorry, most previous impulsive wave. Look inside of that. Where's price likely to react to? There's a few regions here. We have this region, potentially also this region, which I think is what I actually had drawn out beforehand anyways. POI. And then there's even this zone, arguably, that could get mitigated, but there is some inefficiency above, so I think if we're going to surpass this level, we're probably going to come much higher to mitigate that. So they're the two most likely zones I'm looking at. So now when we go down, we've had a displacement, some bullish structure, potentially a wider scheme retracement. So you see how my bias has instantly changed now, where I thought that we're potentially breaking down. I think arguably, if anything, I actually want to see price traders up into here, clearing out a lot of the liquidity in this region, because we have built, obviously this entire area represents level of liquidity. We have technically held this low and created a higher low, technically. Obviously displaced, so we've put in a high So we're now expecting price to put in a new higher high. So looking inside of this, where can price potentially trade back down to find enough demand to make that move? Well, I mean, arguably this candle for one. Short answer, there are people with deep pockets who sold USDT, what is algorithmic stable coin that mirrored the US dollar 1-to-1. Oh, right, okay. Oh, okay, so everybody sold Luna and it crashed. It was a top 10 coin. Jesus Christ. So I'm trying to just make sense of that. So in order to get your hands on this Luna coin, you had to convert your, like, for example, if you're in America, your US dollar into USDT and then buy Luna with USDT. And because USDT got manipulated, it was the smartest move to sell your Luna coin because you could get loads of returns from selling it, right? Because you could then get lots of USDT, and then because USDT could be sold for a lot more back into US dollar, the smartest move was to sell Luna to get more back. Yeah, okay. I'm with you. Wow, it's insane though, isn't it? Obviously people who had millions invested, yeah, smartest move. Put millions in, let's suddenly just get like 10 million back. It's insane that happens. Because USDT was not meant to go less than $1 and it went to 40 cents. Wow. So it's not meant to go less than $1. So 1 USDT was 40 cents. So you could sell. Wait, so then how does that make sense? If 1 USDT equaled 40 cents, then surely if you sold loads and got lots of USDT, I know, because then it makes USDT less valuable. Oh no. Oh, is there a market for USDT? Market cap, is this what we're on about? No, that is not what we're on about. Jesus fucking Christ. What the fuck is that? Is there not a market for USDT? Or am I being really stupid right now? Ah, here, USD. Holy shit, wait. This is what we mean, because it's meant to, like... Is this the market we're on about? It's meant to just hold. Okay, so yeah, obviously we can see it's mirroring literally at 1. And then we have this massive shoot down to here. Oh, okay, so yes. Right, okay. So basically what happened is USDT became extremely more valuable overnight. But that's insane. I'm guessing this is the right market, because obviously like it's mirroring it, and then suddenly shot down, but then very quickly, obviously as you would expect, had a reversal straight back up. But that was still I mean, exactly when did this happen? Yesterday morning. Wow. It's insane. Regardless, what were we saying for this market? We were looking at potential demand zones, which would represent that right there. Which could also be oh, it's hard because there's a gap there, so we don't know exactly what's happened. Arguably that manipulation of liquidity comes to mitigate that, which then gets mitigated itself. Come to here, trade up, that mitigates that potentially. Okay. Potentially lower time frames may reveal all to us. No, there's no clear. There's no clear region, to be fair. Everything looks fairly mitigated. I'd say that is pretty much the reason. Maybe that's what's happened there. We've had the mitigation. Come back down. Do we potentially now see that's been mitigated here? This is the remaining unmitigated position. To potentially see price now reverse from this to make a next move higher. Let's make a wild prediction and come back at this at some point and say that price will take us to here. Let's see if we can refine that stop. So that's already a 15 to 1. Let's play a little game. Let's play a little game. Why have I got a Spotify notification? Spotify's been trying to flog me Spotify Premium for way too long. Honestly, need a restraining order from them. Right, let's actually see if we could have got entry. So there's clear accumulation, sign of strength, spring. Look for the mitigation of the spring. Although that may be hard because we weren't delivered any real displacements. We do get delivered a displacement here. Do we ever end up coming down to trade into something? We never come to manipulate this. It comes to not mitigate that. Yeah, I mean, that's quite tough, actually. Maybe no solid entry. Yeah, springs can literally be that tiny. Springs don't actually have to leave the trading range at all. They might not even surpass the previous lows. If you look at Wyckoff schematic 1 and Wyckoff schematic 2, I can actually get them up on screen, actually. We can see that we don't actually need a spring. We can have something called a shakeout. But this is a spring because it does surpass previous things. This would be a shakeout here. I'm on the wrong website. Great. Well, great start. Accumulation schematic 1. We have the spring, which just about clears liquidity of the previous lows. And then we have accumulation schematic 2, where I usually like to see this as a shakeout where price doesn't surpass these extreme lows, but we have a lot of intermediary liquidity, all of these regions. And we may see price sort of just tap us down to this level. So it's still clearing all of intermediary liquidity, but not all. Anyway, it would have been hard for us to actually identify a need for a mitigation of this just because we don't actually displace this first, which arguably we would have liked him, but we could have been aggressive and look for a mitigation. Price then moves up. We then get the major displacement of the entire schematic and LPS. You know what? It's probably nice if we actually do keep that schematic up and then we can just reference it over. I never really go into too much detail with Wyckoff, but let's do so this time around. So I will label it and then we can compare the two. So selling climax. There's no right being that large. Secondary test. After that, so we have the automatic rally inside of here. I forget that I had cap blocks on. Brilliant. We have some preliminary support in this region. Sign of strength. Spring. The test or the shakeout. Reason it's a shakeout is it's not a spring, but it does come to clear all intermediary liquidity. We then also get LPS. Well, original LPS there. Another LPS here. Now, if we can compare that, take a quick... What the fuck have I just done? Take a quick look there. Compared to this. Very, very similar thing. It doesn't really show us a sign of strength in there, does it? But we can see sign of strength. This. Pretty much representing that. Obviously, it looks very similar. That's a very nice accumulation schematic. But the point I'm trying to bring in is that sometimes, or majority of the times that we've had a Wyckoff schematic happen from this spring, so at this point, there's no more downside target, so they're going to execute, I'm talking about the institutions, they're going to execute heavy buy positions, and they have no reason for price to go low. So once they've executed those positions, there's so much demand in the market that we see such shallow retracements, and it's so hard to get involved at the start because price just doesn't have enough supply to give us large enough retracements to get involved with, which is why sometimes not being aggressive at all and being too patient can potentially shoot you in the foot. But couldn't price come down to just above your entry to make it less bad to sell? That could be your entry where your first LPS is. So you mean this? Oh, I did not really add text. So I'm guessing you mean either this or this zone. The zone that I do like is definitely here. And when we do get a wider scheme retracement, most definitely price could come and mitigate this. But if we're getting in on structure as of current, like following fractal structure, so impulse retrace, impulse retrace, impulse retrace, impulse. We've missed entries on fractal structure, but obviously we'd be able to wait and see if price comes to give us a wider scheme retracement, which probably, or would hopefully come to this, because this is definitely institutional control. We've had this as a protected low and then price is blown straight through that. So this is the most likely spot to see get mitigated. So it'd be very nice to see price tap into that. So we're going to set an alert. Remembering what you said. Add alert. Game changer that. Okay, yeah. So, fair enough. Sorry, I just remembered as well. I said that I'd actually try to refine the stop loss, which could come all the way down to this, at least, because I believe that that is at least a protected low. That becomes a 46 to 1. However, if we want it to be very, very ballsy, let's say we got involved in the test right here. We had our stop loss just above, assuming we had raw spreads. That is when we can start to get these crazy risk to rewards, like a 70, because we've done our overall analysis, and our overall analysis indicates that price should at least trade us up to there. Then as we've come all the way down from like the 1 day to the 15 second, we see that price has respected our like 2 hour zone. And then once it's respected that, we found an extremely refined entry on the 15 second. And that's just how we need to be able to use a range of time frames to get involved. But as you say, like moving forward, not following fractal structure, following like, obviously seeing this in itself as an entire impulsive wave, we are going to have a correctional wave come back down at some point. So you are right. We'd want to have this zone mitigated for when price potentially does come and do that. We had a brief Reddit conversation 20 days ago, and I stumbled upon your page. You are very good. I believe it's Luke that runs the Reddit account most of the time, so you probably spoke to Luke. But I appreciate you coming in and checking out the live. And it's good the fact that you find our content useful, and the fact that you think we're both very good at what we do. I trade slightly differently to Luke, and we still have the same base concepts and ideologies and rules that we follow. We just specialised our own little strategies that we use in the market. But I appreciate you coming in. I appreciate you checking out this live. I'm not 100% sure how to pronounce your YouTube name. Is it Lado? Appreciate the support. Luke is actually away for the weekend, as it was his birthday, but he will be back. I think come Monday he'll be back. So if you're not already, make sure to get involved in the Learning Lounge or message me or Luke directly on Telegram, and he'll be more than happy to have more conversations with you and provide you with some more knowledge, some more information, and some more help. What we can do actually is we can go and check out Euro USD again. So we just got alerted. Oh yeah. Okay, the way that price is already in there, it's not going to mitigate that. Yeah, we can see price is about to blow through it. I'm currently a proprietary trader at MFF. Maybe could have a beer eventually. I'm in the US. So me and Luke are actually in the UK. We're in England. MFF, never heard of MFF. I'm unfamiliar with a lot of proprietary firms in the US. Obviously, I'm not from there. Do you mean My Forex Funds? Okay, so you're a funded trader with My Forex Funds. Very good stuff. Very good stuff. 5% daily drawdown, 5% profit target phase 2. So My Forex Funds. Yeah, it's good stuff. I mean, in our Learning Lounge, I know me and Luke, we post through quite a lot of analysis. What sort of markets are you trading? Do you dabble with Forex? Are you more into indices, stocks and shares? What avenue do you prefer to trade? Ben, check out US 100. Minus 30%. Wait, what? Oh, you mean from its peak? Yeah, about 30%. Yeah, I remember doing this analysis with a friend of mine a long time ago who liked to invest in indices. I know a few people I knew were looking at this and they just had this superstition that price has to continue trading bullish because the NAS can't go lower. Like, it has to keep going higher. And after we had this displacement, I was telling everybody, look to go short, do not look to buy against what price is delivered us, like, regardless of whether we think this should always be in an uptrend. Like, we've been delivered a displacement. The institutions are showing signs that they want to start running the lows, and since then we have literally traded some perfect bear structure, and can potentially look to try and profit from that. I'm a momentum-based currency trader. I look to enter macro trends with micro entries using a 1 and 3 minutes. Yeah. So I guess, let me just look what happens here. So I guess for you, it's more about, let's say, for example, we'll go back over to, I don't know, the Australian dollar to US. For you, you're potentially using like the 1 and 4 hour. Let's actually get rid of all other drawings from the examples we were making earlier. So I guess for you, you're looking on the higher time frames such as the daily, 4 hour, and when we see price approaching your points of interest like here, you're looking to then find 1 minute entries, and then you'll just hold that entry for a long time. Do you look to trade daily, or are you looking for these more like longer term swings in the market to get involved with and then holding them for a long time? Or do you like to hold things for a day, get out of those trades, get back in? I personally prefer to just hold things for a day, a couple of days, just because with Forex it's rare to see huge percentage changes, like because we're so up and down all the time. I like to just try and get involved in every smaller swing, as I believe there's slightly more profitable opportunities, but obviously every trading strategy is profitable if practiced. Because I definitely used to be very much like that, the way that I think you trade, where I'd be waiting for longer term swing points to be created, then try and get involved here, and then just let those trades play out without trying to re-enter or anything like that. Whereas now, for example, I'm constantly going down the time frames, analyzing structure, trying to find other areas in the market that I can get involved with. So obviously we can see here momentum's running out. We're at the end of a potential impulsive wave, so momentum to the downside, following the downside trend, has diminished now. So we could argue getting in on sales isn't that wise, but I'm being quite aggressive with it because I like to be a day trader, so I've been looking for opportunities to get involved in the market all the time. So getting involved here on a correctional wave in the fractal scheme of this entire impulsive wave, which is actually playing out. We could update this in the group chat. I actually sent out a potential or signs that I was looking to buy when price was around this region. Obviously we see that price has now played out quite perfectly, hoping to see price then come to mitigate the supply zone higher. I guess we could look to update this. With the idea that we would have entered here, we'll take profit up here. Right, now I hold things for up to an hour, typically shooting for 1 to 4, risking around 4 to 10 pips. To become better, I undoubtedly should hold longer. Okay, hold things up to an hour. Yeah, no, that's fair enough. Yeah, risking around 4 to 10 pips. So yeah, you're looking at trades like this, like intraday trades. Yeah, so I think it just means because he's obviously using the 1 and 3 minutes for entries, on average, when you're finding entries on like the lower time frames like I did, I could have done here. Yeah, your stop loss is going to average. I know a lot of funded traders do the same. They look to trade the 5 second, 15 second, 1 minute, 3 minute. Your stop losses are around like 1 to 10 pips. 3 minute TP. Oh, no. No, he means his stop loss is usually around 4 to 10 pips, so that's usually his risk. And then obviously you'd be looking to make 16 to 40 pips back. So yeah, very similar. I mean, to like this trade that we potentially could have entered. What we can do as well is just see if we could have got entry confirmation here. Right, there are moments I could have 2 pip stops. Yeah. So obviously we see price break out of this accumulation that we were undergoing. So we've had the displacement here, so we could have made the assumption that price wants to tap us back in to this last sell candle before we took off. So we would have let this continue to stay highlighted, loving the idea that more and more liquidity is getting built up because it's all stopping around the same region. To me, that is a nice indication that we are eventually going to come and stop that. Price trades us in. We have a fractal displacement. I mean, if we had this refined, this is really where institutional control started, because we had this level of inducement created, liquidity created, and then we showed signs of another reversal from this level. We go to 15 seconds. And then we have that heavy push through. So this entire heavy push through, to me, is really where institutional control started. So somewhere in there needs mitigating, although we could have potentially refined that to this zone. I don't know if this zone would have actually held. But let's see how price trades us back into it. However long it takes for it to do so. Let's go to 1 minute just to speed things up. Getting ready to pause. Any minute now. A nice redistribution there. Okay, we're getting ready to trade in. Back down to the 15 second. Slow things down. See if we could find a potential entry. Okay, so we've had a displacement, an early displacement. In the scheme of fractal structure. Potentially early signs. Given we see some reaction from this area, we could potentially look to sell, to me, potentially from that area. We blow through. Break the low. Create some liquidity. Be nice to see now something comes clear that liquidity. Okay, we definitely need to speed this up. Okay, slight liquidity clearance. Wait to see if we have any displacements. There we go. I think we displace that high. See if we come to mitigate the last sell in that region, in this box. No, that could potentially be our spring now. A full displacement this time. Let's see. Higher time frame displacement now, which we would arguably want to wait for. Obviously here I was looking to be very aggressive because I was seeing if we could get an extremely tight stop. But no obvious positions. Obviously price never fully tapped us down into the very last sell candle. Obviously I was looking inside of here for potential reversals, but none were given. I would never just enter as soon as price taps the zone. Like, we need to see a slight few seconds of consolidation and then some rejection before we enter. Obviously higher time frame displacement now, so we can look inside of this and say, is there anywhere that needs mitigating? I mean, these lows represent areas that could remain unmitigated, potentially even this sell position here. Could be lower. I do like the way we've had reaction from that zone though, I must say, and then displaced. So arguably, if we go to a 5 seconds, does it look quite nice on here? I mean, that is an accumulation. We've had consolidation, liquidity build, and then this acts as a spring. Displace fractal structure. If we're watching on the 5 second, maybe we would have seen that and got involved the second we displace fractal structure. Stop loss here, and then let's see if price ever comes to hit that stop before taking off. No, that is like the best entry I could possibly think of gaining in that region, if I'm being honest. It gives us a 16-1, but that is like the best entry I could possibly find. And that's even if I found it in there, because we had to spot that 5-second accumulation. You see, anywhere else I was looking for entries, we never had something like this. Even if we just take that back again to the 5-second. All the other regions I was looking at inside of here, we don't have like a nice region of consolidation, a clear high volume spring created. Like, there's none of that in these regions. So that's a great way to tell, is understanding how Wyckoff shows when we can't see every single individual event and phase. That is a great example of that. And I wonder if moving up there was any potential opportunities we could have got involved with. I'll just keep identifying demand zones that could have been reacted to, and we'll just see if price taps any of them. How much do you risk per trade? Yeah, 1% for me as well. I think when I get funded though, I will be looking to risk 0.5% or 1%, just to try and avoid any big drawdowns, because there are times in the markets that it's tough and we have a tough trading condition. We will go into slight drawdowns, so we've got to protect ourselves how we can. See, do we quite tap into this? We'll find that out shortly. No. Seems to have broken the high. No obvious zone for me in there. I'm going to let price slowly play. I need to go and fill up my water. My throat is a bit tickly. So I'll just keep letting that play. I'll be back with you in one moment. See if you can spot any entries in the market as price plays. I mean, price is playing out here with extremely high volume. Very few retracements that can be seen that could provide entry opportunities. So, would definitely be tough looking at it. Which is why sometimes like getting that entry is so crucial. So I wouldn't have spotted that accumulation on the 5 seconds. Yeah, that's what you need to try to learn. Is seeing an accumulation within a few candles rather than having like the entire schematic. I can't remember which. Like for here, we kind of have the entire schematic played out for us, don't we? Where we can see selling climax, automatic rally, secondary test, sign of strength, spring, test, and then we start trading higher, and LPS, so on and so forth. But the thing is, we can't go any lower really than a 5 seconds. So it's not like we can go lower to find this inside of a point of interest. Like, we just have to use candles. And if we were to read the candles, we can see this wick represents like an early preliminary support down into some selling climax, automatic rallies, some secondary tests, and then the sign of strength comes to clear the top of these both candles, so it's technically left the trading range. After that, we have a push through the bottom of the trading range and then move higher with high volume. I subscribed. You guys are legit. I really appreciate that. Any support is always highly appreciated. We're really trying to get out there more and give as much information as we can away to people. Yeah, you can see. Yeah, no, it is tough. But it's just understanding. You just get used to how price typically reacts to valid zones, and I did quite like the reaction in that. So obviously when we were replaying, price was playing out a lot faster than it would do if we were just sat watching it at the time. But I think, I mean, obviously this is hindsight, I think I would have been able to spot that just because this does look like quite a nice accumulation. And after we saw some early displacements, Potentially we could have been aggressive and got involved, which would have given us this opportunity. I don't think there's no clear unmitigated zones. I think that one's been invalidated, so potentially this is quite a nice last sell to buy because it clears that low, clears the liquidity built up in that region. But it appears, I'm going to hide this for now just because it's in the way. Let's speed that up a bit. 2 meters 15 seconds, probably easier that way. Okay, we're continuing higher. Potentially, actually, we just missed something. And here where we see price come down, we have some inefficiency. Potentially an entry in there. Go down for 5 seconds, double check. If the chart would like to load for us, that is. Okay, I don't know why it's doing that. Let's try it one more time. Yeah, there we go. A nice wick here, which could potentially argue that price needed to tap. Again, that is a relatively tough entry to spot, but obviously there's no retracement here. Nothing comes back to mitigate it. We leave that region unmitigated. Price does come and tap us in. There's a potential entry that we maybe missed. Moving forward, we might tap down back into this candle. Oh, have we broken the high? No, we haven't broken the high, so we can't arguably take that sell candle as a demand zone. Nope. Let me draw this out just to see if we would have been correct. Wow, very, very sideways. No real tap at all. Do we continue higher from here? Okay, and then we're at price as of recent. So when there is so much demand in a market, and when the market is so heavily one-sided, this is why it's so difficult to get involved, because very few retracements provide very few trading opportunities, which is why Wednesday and Thursday I struggled to try and scalp the markets as much, because they were just so heavy to the downside. And it's like in this entire move there was this potential entry and this potential entry, 2 potential entries in this entire move that we could have found. And usually we have so much more, but this time around there's just very few potential entries to get involved with. So that is just the way it is sometimes. It can be very, very difficult. We can get rid of that now. We're back to current price. Just see what Euro USD did. Obviously we saw it blow through that zone. I think it's probably going to now disregard the highs, just because it's not really showing any signs of slowing down. It's obviously got a lot of demand in the market. What else did we have analysis on? I believe it was, we're looking at the Great British Pound to Australian. If there's any question anybody has, do make sure to ask. Why is that being weird like that? Okay, 1 minute. This is the one we were just looking at. Obviously, we've seen some rejection now, so potentially price puts in this wider scheme retracement. This is quite a nice zone because the wick represents volume. We'll just see what price does. Is there any markets anybody wants me to take a look at? Anything like that? Let's also, I mean, it is a Friday and it's reaching the afternoon. Let's see if we can find a bit more upbeat music. Just get the vibe up there a little bit. Gaming music live stream. Wow. I'm gonna dare to try this one. I'm going to dare to try it. Okay. Let's skip it in. I mean, yeah, let's let's roll with it. Let's roll with it. All right, we'll roll with it. We'll roll with it. How many years in are you guys? So Luke has been trading for 6 years. I don't know his exact start date. I know he started when he was like 17, 18-ish. He's now 24, so 6-ish years. And I'm 2 years in, so a bit behind him, but I am a lot younger. We started at the same age, so he's 24, I'm 20. We both started about 17, 18. So I'm about 2 years in now. He's about 6. So combined, a fair bit of experience between us. In terms of LAGFX as a company, Luke started the company about 14 months ago. No, longer than that, sorry, longer than that. It's 2 years. Add 2 months. 26 months it's been going for, and I've been part of LAGFX for 14 of those. So it was going for a year, almost a year before I got involved with it. Would you enter this live if it was to come down, or leave it? I'd be cautious at the moment just because it's Friday, late at night. And our take profit that we're looking at is a large take profit. I'd rather just wait until Monday to actually... I'd actually probably wait to trade till Monday. I'm not looking to actually place anything, but if it looks really nice, maybe we'll look to hop it on. Hello everyone, Abdul, welcome in. How are we doing today? After 2 years, you can become sharp. Yeah, 100%. Things sort of started to settle in with me after about a year of learning and doing things. So it took me like a year just to get familiar with the markets, and then on top of that, I'd say it took an extra sort of 6 months to really get into a good spot. So I'd say only for the last like 4-5 months, 4-ish months, has everything like really been good. Has my skills really been doing the best I can? Doing great, thanks for asking. Good stuff, good stuff. How about me? I'm doing amazing, thank you. I appreciate you asking. It is Friday, so we're just doing some like final analysis before the week ends. The market's been quite slow today, not an extreme amount of trading opportunities. There's still been some, don't get me wrong. We've just been going over a few markets and just finding ways we could have got involved today. So we're looking inside of this. We're now waiting to see if price actually taps us into there. We just have an alert set. We're liking the fact that price is starting to reject to the upside, so that's very nice. Obviously, we've had a fractal displacement inside of this region. Obviously, we set this low, broke the high. This should have been a protected low. We broke that. We then came up. I wonder if it perfectly mitigates this tiny buy candle. Let's see. Yep, perfectly mitigating that tiny buy candle right there. So that is a sign of a reversal. And then after that, we've displaced fractal structure again. It seems like we then come back up to mitigate again the last buy candle. With this low was the previous low in the market. We've surpassed that previous low, so it appears that price is ready to trade down. We've had some fractal displacement, some early signs that we're going to start going bearish, so I think from now price is probably going to start trading us down into this region, and to me this is the most likely zone it will react to. What do you guys trade? So I stick 80-90% Forex as the odd few other markets. I do check such as gold, US oil and Bitcoin, but other than that it's mainly Forex, foreign exchange. How about yourself, Abdul? So we'll just see what happens here. Obviously, we could be waiting a long time, so we're just going to have to leave that alert and go off to look at a different market. So if anybody's got any ideas of any markets you'd like us to double check or look over, so on and so forth, make sure to let us know. This market recently has just been vile. this market still trading as bullish, potentially into one of these regions. Forex and NAS. I went long on GU. Like down here, I'm guessing, were you seeing this as like an accumulation? We were, I think, I've got the wrong market here. Were we looking at this as an accumulation? I think we were talking about it before, weren't we? Where we're saying that we've had the break of structure, we've cleared all intermediary liquidity, we've broken the high, or showing signs of breaking the highs, so potentially we're now going to see some 8515. Just need 218515. Here, near where I've got that zone drawn out, I guess. I want to see this candle right here get mitigated, clear institutional control. Be nice to see price traders back down into this for potential longs. Changes to a demand zone. POI demand. So we've had some nice displacements here, so it seems like we're going to go higher, potentially to that zone above. So really we're looking to take longs all the way up into this region. This would be a very nice buy entry, I'm not going to lie, if we could potentially find something inside of that. So that isn't actually the way that we want to have this. So that's our fractal displacement. And then our higher time frame displacement right here. So if ever you look at my analysis and I have HTF, that means higher time frame. LTF displacement, lower time frame displacement. This new playlist we've put on is a bit wild, isn't it? A question from an American: do you guys still have beef with France? You guys have been at it for hundreds of years. I have no idea. I feel like it is still like inside of British culture that people seem to just dislike them. I don't know why. I have absolutely no problem with anybody from France at all. I would never judge somebody based off where they live, where they're from, where their family's from, whatever. But how do you think I'm picking up training the same as you did all this? And how far are you in? I'd say better than me, potentially, or around the same. I wouldn't say worse at all. I just learn completely differently to how you're learning. My learning was just... When I first got into the strategy, I basically spent like 3 months just studying Wyckoff, and solely Wyckoff. And then it wasn't until more recently I started getting into like smart money concepts. So like the ideas of liquidity and points of interest. And it's only very recently that the full concepts of structure, fractal structure, the way that we use structure has really settled in. So I'd say the best place to start is just understand structure to the best extent that you possibly can. And as you see with my top downs, it's like using the 5 second, 15 second, 1 minute for entries, but following your higher time frame bias. But using those lower time frames to get precise entries. So I've used my overall bias, or my higher time frame bias, to understand that price should trade me up to here. And then when we're now on like the 1 minute, so let's say we're on the 5 minute. So we identified this entire structure alone on like the 1 hour, let's say. We've then come down into 5 minute structure to identify this region. Now when price trades into this, we'll then drop even lower, like the 15 second, to find an exact entry inside of this. And then because we're finding an exact entry on like the 15 second, let's say price traded us back down and did a little something like this. Obviously then taken off up into this POI, just for the example. We could have got involved when we saw the test of the spring here, stop loss below that. So because we've gone down to a much lower time frame, we've been able to refine our stop to 4.6 pips, but then we've been able to use the take profit that we established from our higher time frame point of interest. Because instead, if we were to just follow fractal structure, our take profit would be here, but because we're now following our higher time frame bias, we can then take that take profit all the way up to here, which gives us 32 to 1. So being able to understand structure in the correct way allows you to catch trades like this. Fully, I have started like 3 months ago. Yeah, no, that's very good. 3 months in. To be like that, the best thing that I learned from is just watch videos of any YouTuber that does smart money concepts. You can watch some of the things I do with smart money concepts, LAGFX, Pips of Persia. You probably know some people yourself. And just if you have 2 monitors, or even if you don't, have YouTube on one tab, TradingView on another, and just watch through the video. And when a concept is brought into you, look in the market straight away and try to find those concepts. And then on top of that, just a lot of analysis and a lot of back testing. So yeah, Abdul, I think you could potentially be in for a very nice buy position on GU, on Great British Pound to US dollar, following what's happening as of current. After this higher time frame displacement, it seems like we are more than likely going to go bullish. And from my personal analysis, I personally believe that price will probably at least trade bullish up until this point at what, 1 point. Let's get an alert here as well. It lets us 1.2352. So you're doing ICT. I don't understand what you mean by that. So you're doing ICT. Is that an abbreviation for something? I've never actually heard that terminology before. We can do is go back to the other markets we were looking at. Right, British Pound to Aussie, was the other one right? Are we looking at this region? I can't remember what we were saying. Oh yeah, we're saying that price appears like it could begin to potentially trade us back down into here, but it's broken that structure, which is fair enough. The other market we're looking at, Australian dollar to US dollar. Oh yeah, that's what the one that we did some back testing on to see how we could have got involved. Strange. The yen quote pairs have also been extremely strange as of recent. Pretty hard to trade in all fairness, but we've had this displacement, so we need to try and determine whether that displacement had the purpose of mitigating the last sell to buy, or if it had the purpose of now running liquidity low. So that's one thing to watch out on. Although there doesn't really seem to be any unmitigated positions. Potentially, the only one I see is this candle right here. Let's see if price reacted to that. Yeah, potentially. Maybe that was its purpose, was to trade us down here. We'll have to see. It's likely for it to be able to, because until we break this low, arguably, we've still not given full confirmation of bearishness. Like when we displace this low, we could have been bearish anywhere above this low. So we'll just have to see how price reacts to these two regions. Potentially we see a little bit of supply get introduced at them, potentially not. But I'm curious to see, must admit. I don't even like the look of that as a zone, but we'll keep it like that. Yeah, no, LAGFX is the one person I learned from, in all fairness, and I never bought his mentorship, although I've heard that his mentorship is amazing, don't get me wrong, but I never bought it. I just used his videos and did my own research. things just slowly begin to click. I was speaking to Ryan as well. Inner circle trade. Oh, right, inner circle trades. Right. Okay. So I guess you understand it as like inner circle traders, like the market makers, people who control the markets, people who have so much liquidity that they're trading with that they control the markets. I think that's the same concept you mean. So yeah, inner circle traders, smart money concepts, institutional trading, trading like the banks. Many different ways it's known as, but the idea being that yeah, we're trading like the top people do in hindsight. Yeah, I definitely recommend LAGFX. So I learned a lot from him. Although the thing that I don't sometimes like about his YouTube videos is that he just covers the same topics over and over, and I just found it got to a point where I was watching his videos and they just weren't in depth enough for me. They just didn't provide enough, and at that point that's where I did research and also just spent a lot of time in the markets, a lot of getting it wrong, a lot of losing, to sort of learn what it is I was really doing wrong. So a lot of it, yeah, just self-taught, and I think you can't be afraid to fail, which is why I think it's silly to go straight onto live funds when you're trying to trade. I think when you're trying to place your own trades, obviously if you're following somebody else's, if you're in a group, whatever, fair enough, use your live funds if they've been proved as a profitable trader, but I would never use your own funds until you're extremely far in, just because a lot of learning is failing. And if you put that pressure on yourself when you have live funds that each time you fail it's bad, you need to understand the concept is each time you fail it's good, because it creates a learning opportunity and you have to learn from the failures, because if you don't do anything about your failure and just disregard it and shrug it off, that's going to happen again. Similar to smart money concept. Okay, fair enough. I don't know exactly what you'd call it. To me, I just called it smart money concepts. I would learn it as smart money concepts, but I figured when he said inner circle traders, it was something fairly similar. It's just that same concept, the concept that Mr. Richard Wyckoff came up with over 100 years ago, trading like the banks, or trading like, or understanding that the composite man runs the markets. That's why I took my money out and I was with the demo. Yeah, it's good, but the tough thing is with a demo account the spreads are ridiculous. So at some point I wouldn't even like use a demo account in one place. I'd just say, for example, like when I thought an entry was confirmed, like say I saw price like trade me up, when I thought an entry was valid, like maybe after that displacement and we trade back up, or after the higher time frame displacement and then we come to trade even higher, wherever it may be, I would just place an order like this wherever I wanted my take profit and SL, and I'd just see how it played. Abdul, yes, we have a VIP chat, and we actually have two. They're both included with the VIP package, so you end up getting added to both my VIP chat and then Luke's VIP chat, because we trade quite differently. You get to see everything that Luke's looking at in the markets and how he's looking to tackle them, and also everything I'm looking at in the markets and how I'm looking to tackle them. So you're actually getting two people for the price of one. Yeah. Your trades call. So the VIP chat alone is just access to me and Luke, analysis and potential entries that both myself and Luke are looking at. There's also a lot of content in these chats, so if you actually click inside, there's a lot of PDFs, documents that you can follow along with. But the mentorship program is a completely different thing that is coming within the next couple months. That'll be an entire 6-month syllabus where we pretty much take you on a course for 6 months, teach you everything we believe there is to know about Forex, with weekly calls and whatnot, and then that is our mentorship program. I can get an icy market demo and spreads are 0.7 pip. Yeah, no, that's ideal. Because it's tough, because I'm actually on a pro account, so most of my spreads are like Euro USD is usually raw. The highest it ever goes is like 1 pip on some of like the wild markets, but it was tough because on the demos you can be looking at like 5 pips, and when you're trying to get those refined entries, it's not a true representation. And anything with USD is yeah, like nearly raw, so that'd be very ideal. Can say again, please? Okay, yeah, no problem. So what I can do is, if you give me one moment, Abdul. So we go over to the LAGFX website, our services. So we have all of this is where you can see it explained. So this is what explains a VIP membership. If you want more information, click here. This gives you everything on the membership benefits. Sorry about the cough. So obviously you can read through that. We offer educational courses, blah blah blah. Our services packages. So the monthly membership is £40 every month. Obviously we have the mentorship program, which is coming soon, and 2 courses. What the VIP membership is that if you sign up with one of our affiliated brokers, and you open an account with them, we then put you onto the VIP membership. So if you have in any way been affiliated with us, whether that's sign up with our broker, or if you purchase anything else, like one of the courses on the mentorship program, you get the VIP membership. Some of these actually include free access to the VIP chat, but basically, if you have an affiliation to us, we can give you the VIP membership, but the regular membership is £40 a month. You would just select sign up, and then I can show you on Telegram. This is my VIP chat, so it's just lots of analysis that I post through every day. This is actually trades we're looking at the other day. Ended up hitting a take profit for plus 45 RR. I'll go back up to the exact, where was the exact one where I said I was looking to, which market was it, sorry, pound Aussie, yeah, okay, here, yeah, so we were looking for mitigations of these zones, continuations lower, and then we can see that price at this point came to mitigate a zone we were looking at, but we got involved in that tap there, and then from the tap of that zone, price then ended up taking off. We found opportunities for re-entries, more re-entries, price plays out, just lots of different analysis, and then you've also got Luke's VIP chat, plenty of analysis himself. I think the last trade he got went up to 4.5 RR, 9% total. Take profit there. You know, lots of different analysis. The other thing, which is great, is you can click at the name on the top. 1,000 photos, loads of analysis. All the way at the bottom is educational stuff. Videos, files, links, all of that good stuff. There's plenty of content there. So yeah, worth looking into. If not, we do of course have the Learning Lounge, where other stuff is put into, analysis and whatnot. Again, inside of this, loads of files, some free PDFs. So there's a lot there, a lot of information to use. Sorry, I've just got a really dry throat. I don't know why. I think it's just because I've been in calls before this, so I've just been talking all day, and it gets to you. If you have any questions, though, make sure to ask. apologies about that. Yeah, do we have any questions? If not, we may look to why is too many VIP chats? There's just two. There's two VIP chats. So we did used to have the VIP chats merged as one. This used to be the main. We just had one. There was just one chat. That was it. So once you subscribed, there was just one chat, and it was all in this. Then we actually put a poll out the other day. It might have been deleted. We put a poll out just saying, would everybody like to see them split into two, because we both have different strategies, so trying to keep up with them both can be a bit difficult. So we split them into two, so two VIP chats, and you just go into them both. So you can follow either just Luke's analysis and strategy, my analysis and strategy, or both of them. The Learning Lounge is completely different. This is the free chat. This is not VIP. This is free to everybody. I can even give you the link. I'm not sure if you're already in that, but I can give you the link for the Learning Lounge. That is completely free, so you can check that one out. And then there's just two VIP chats, just so you can keep up with both mine and Luke's analysis in separate areas. And the great thing is, as you can see here, USA traders, we can't open accounts outside of USA. Yeah, that's tough. I'm not sure. Some of our, we do have two brokers we're affiliated. I believe one of the brokers we're affiliated with has. Well, we're affiliated with BD Swiss. BD Swiss unfortunately does not accept US citizens for tax purposes. Okay, maybe not. But you can see here, like, people have commented on that post where Luke put up, and one of the clients profited £900, another client 23, somebody else, Edson, that was his day on Wednesday or Thursday, where he made 1.5k back. Scott's profit sheet's £31. Gaz, his profit sheet's 57 quid. So just all proof that people have been placing. You see Euro to Australian, Euro to Australian, Euro to Australian. Those were his own gold trades. Euro to Australian, Euro to Australian. So that's just proof that people did place this one and made profits from. So if you're interested at all in that, then just go on to the, either message me or Luke personally. Luke's is at LAGFX, and then mine is how do I even settings? Mine is at James LAGFX. Or that is my number that you can follow. So pause the video right now if you want to add me on Telegram. I'll do that. If not, what I can do, if you've just joined, you say Abdul, I'll add you to my contacts. You know my contacts. And yeah, I will send you a message right now, just so you have my contact saved. So if you need help with anything, you have any questions, just message me on there. So we are affiliated with BD Swiss and Axie Trader. By no means necessary do you have to sign up with them to be in a VIP chat at all. Like, you can use any broker you want. That is completely fine. I'm not going to try and push anybody to ever change the broker. If they're happy with the current broker, stay with them. It doesn't bother me. It's just obviously if somebody signs up with our broker, that helps us. So we're more than happy to help you back by giving you a discount on the monthly membership. But Abdul, to be fair, just chill in the free group chat for a while, and if some of the analysis you see or some of the stuff you see in there you do find interesting or you do find useful, then by all means message us about the VIP chat. If that's not something you're interested in, completely fine. But a lot of the stuff I post in is like analysis I'm doing on the screen today, but just a bit more in depth. What happened with Euro to US? Okay, a potential reaction from that zone actually. potential displacement. I probably want to see this low get broken before anything, but that is quite a nice bit of Wyckoff, well, a distribution. Wyckoff. So potential entry confirmation there. We could have entered, we could say low was penetrated, so displacement, price traded back up to mitigate something in here. We'll just see how price plays, but you know, potential sell entries there. AxiTrader. See if AxiTrader takes on. Let's look at the FAQs on AxiTrader's website. They usually have FAQs at the bottom right. Help center. General. Okay, that was that. Trading accounts. Great. Doesn't say anything about US. Luke is the one that speaks back and forth with the brokers. I don't actually speak to them. It's Luke that speaks to them, so he's the better one to ask about this. What about the market? We had a game on. I already forgot which one. It was either Great British Pound to Australian or... yeah, which game did we have? Which market was that? I have to skip back, see which one it is. It seems like we could potentially be redistributing there. Was it Australian to US dollar? No, because we like placed it. To be fair, we've been live for 2 hours, so we started at 3, didn't we? That was just before, so potentially not there. Which market was it? Was it Great British Pound USD, but on the Oanda? No. Wait, which market was it? I'm gonna have to go back and check, aren't we? What's your record for the last 3 months? God. Let's have a look. So obviously we used to both be merged in this chat. I know. I don't know about the last 3 months. I haven't got those documents yet. I know for a fact that the last month we've had potential. So obviously, when a trade is placed for anybody, obviously spreads are going to be different. Exact entries are going to be different. People may partial close at different points. But if everything was to go right, people had the same spreads or raw spreads, were able to get in at the exact point that everybody else was, were able to hold until take profit. I know that this week there was potential. Obviously, the trade I placed was 44 and 45 RR, so potential there for 45% alone. Although not a specific entry was given for that, it was just analysis. But Luke provides specific entries. It is on average 15% a week, 10% to 15% a week. So potentially per month. Obviously, there could be a losing week or a break-even week. I'd say at least 25% every month on average. But most of the time, they play out even better. I'm not linked to like my FX book or anything, so I can't go back to see like my exact 3-month performance. But I can say that our average is. I think a fair thing, Ben. You actually no longer in the baby chat. I'd say like 25 to 30% per month, 10% a week. on average. I mean, we can scroll back through the VIP chat if you really want. The Euro to Aussie obviously ended up running 9%, and I showed you some of the things, but before that we also had another potential entry. If you just give me 1 second, I think that was the actual sell position that the 9% came back on. There was also this one with 21%, so that's 30% alone in the last 3 days. So this week alone, that's 30%. There was this that we caught live on one of our live sessions, which 12.5 RR, Irish 1%, so that's 12%, so that's already, so I've already lost track, so 42% this week alone. Plus this is another one, 42, add 7.8, let's say 8%, that's 50%. You see it's actually pinned. A signal was sent out for each one, or a potential entry was sent out. So Luke stated that he was buying at that point and ended up running 8%. The same with on the live here. On the live, I literally specifically said I was looking for this entry, specifically said on the live, so it wasn't put in the chat, but it was done on a live stream, so it's backed on the channel. We can go back and get footage of that. And then again, obviously that one ended up running 21. And then you can see again another potential entry sent out. So there's potential for a lot. Yeah, partials obviously come into play, but so the maximum possible amount that could have been done there was 50%. Obviously, yes, as you say, Ben, partials could be taken. I know sometimes myself and Luke, I always partial. Luke sometimes advises it. So if you were to just hold until like a close was specifically said, then up to 50%. But as I said, there's so many factors in there, like exact entries, spreads, as Ben quite rightly said, any partials. How many pips without Bitcoin? We don't trade Bitcoin. We don't count pips either, we just count percent. I know, obviously, to be fair, I did say before, I do like to look at Bitcoin. I've never ever placed a trade on Bitcoin, I just like to view it. I can confirm I was on the live watch Wall Street, yeah. There was also another one last week. It was on a dollar yen. I think I might have cleared the analysis though. Yeah, I've cleared the bloody analysis, haven't I? But I remember on dollar yen that we were going through potential entries, and I caught another live on stream. Obviously, I'm not looking to like trade because it's Friday. It's late on Friday. It's not much volatility. But Abdul, if you are subscribed to the YouTube, then I regularly do these streams, and I will literally trade live, so you can literally see me analysing and looking to trade the markets live, and you can see how my performance is there. Yeah, we don't actually trade Bitcoin, and we don't count pips, we just count percentage. I feel like, what was the other question? Yeah, we were trying to figure out what market it was, weren't we, Ben? I'm like scrolling back through the video. Can you let me, Abdul, can you let me in your VIP room for the weekend just to check it out? Unfortunately not. We tried doing that in the past. Like, we used to do a free trial, but people were literally just always taking advantage, and it was a case of like, they would come in for the week, cancel, and then create a different account, come in for the week, cancel, and it's like, the proof's there. We've got we've got live streams, videos, like I just went through the chats and showed you it all. Unfortunately, we can't do anything like that. Like, if you want to be in, great, sign up on the website. If not, completely fine. I understand if you're not looking to be in a VIP chat, absolutely fine. I'm never going to push you to do so. That is just a decision you have to make yourself, unfortunately. Benny, I'm trying to figure out what was this wild prediction I was saying. I think you know what it was. It was what was it? I have no idea. Yeah, that's when we're looking at crypto. And when did we talk about having a wild prediction? Oh, here. Wait, which market's this? Wait, I think I might have found it. Give me a second. British pound to Australian dollar. Alright, yeah, well, yeah, it was British pound to Australian dollar. I knew it was. Because we literally put this position on here the second it tapped. We were on. So, because it tapped in, yeah, at 310. We were looking at it at like, just what time frame were we on? We're on the 15 minute. So we're on the 15 minute and the 3. So we were looking to place it after that candle. And I said I reckon that price will potentially continue trading up. And then we looked at ways to try and refine that entry, which was then when we came down to here, and then when we came up with that assumption that we'd like to see price trade us down into this. Just for one day when the market is closed. Well, I guess I can let you in for Saturday, if it means that much to you. So what I'll do is I'll add you right now, and I'll give you until Sunday morning to have a look through and make your decision. As I said, I don't usually like doing that, but you seem like a genuine person, so I'll let you in there until obviously you'll have the rest of Friday, and then Saturday and then Sunday morning I'll remove you, and then from there you can obviously make your decision and go whichever way it is you'd like. I'll just write that down in my notebook. Yeah, so it was the Great British Pound to Australian, Ben. It was this. But in all fairness, price was already... It was like... When would it have been? So we were... So about 4 p.m. The price was already like at this point by the time we came onto it, in all fairness. Yeah, price was like around here. So it had already taken off a fair bit, but the prediction wasn't just being like the trade itself, because obviously we wouldn't have been able to get an entry there because we'd already passed that, but the idea was that I just think price will make the move higher up into that zone. And I think it's most likely to react to here, if anything. Don't worry, John. There's no pressure. I mean, you don't have to. We don't rely on the income from the group chats. Obviously there has to be a charge because services are being rendered, there has to be charges there. But it's completely your choice. If you have a fairly light schedule, so that when you get these notifications of potential entries, you can place them and you are able to sort of view the analysis, then it will be worth your time, 100%. Obviously, as I said, there was potential to make up to 50% last week in the main chat. Had you had all that spare time to follow them exactly, you didn't partial, and the fact that you were in the live streams and watched some of the things I was placing as well, then you did have potential to profit a lot. So there's a lot of potential there. It just depends if your schedule allows you to do it, pretty much. And in all fairness, most stuff is GA pair of scary as hell. Yeah, it's pretty wild, but it's allowed us to profit quite a bit actually. The last week, we've actually been able to tackle it just because the Australian dollar was extremely volatile this last week. So we managed to thankfully have some form of fundamentals back in the moves that we were looking at, which allowed the positions to play out a lot faster than they would have usually. But yeah, I mean, it can be a stranger market. The reason why I prefer like Euro USD is because I'll trade it during the overlap, and therefore both currencies within that pair are volatile and active at that time. Whereas like when it comes to the Great British Pound to Australian dollar, during the day for me, it's just the Great British Pound that's active, because obviously the Australian dollar isn't as volatile because it isn't during its active session. Whereas it is within the Great British Pound, and then obviously later on in the day, it's the flip side. So yeah, it can be strange trading markets such like that. This market is obviously just playing out. Again, I'm forgetting because I need to take this off and get the Awanda market up, because I say stupidly did my analysis on the wrong one. Yeah, okay, so waiting for that. Euro US. We're going to have to determine whether or not it's reversing in this point of interest or looking to run the liquidity highs, which won't be evident really until we have some form of displacement. So with this one, it is really just a waiting game to see if an entry is actually valid at all. Australian dollar to US dollar, take profit nearly hit. So if we do see a take profit hit, we'll then update that into the main chat, because I showed this analysis when price was like around this point. Do you guys or your students doing any prop firm? Yeah, so we currently have two people, one doing FTMO. I can't remember the other firm the other person was with, but one person actually started the trial of the FTMO and started the FTMO challenge whilst they were in the group chat, and were able to pass it through the potential entries and analysis sent into the group chat. So we were able to help them pass it, and are now trading on a funded account. So we're actually making a decent amount of profit from the stuff that's sent through. Me and Luke, no, we don't. Luke is not funded. Luke has compounded his account over the last 5 years, so he no longer needs to get funded because he has enough equity to trade with anyway. I am preparing to do funded. I am not looking to rush into it by any means necessary. I'm waiting until I believe I am a 100% fully competent trader, which I pretty much proved, but I'm very, very articulate with things. So yes, I could have started it months ago and passed, yes, but I just want to try and get to a point where I alleviate risk, because yes, I could start this challenge, and then the week or month that I start it, we could be going through a really horrible market phase that I've never seen before, and that could end up making me lose a chance. So I want to get as much experience with different market phases as possible before going into it. That's just me being very specific and very patient with it. But yeah, as I said, I potentially could have tried looking into doing it beforehand, but I'm just holding off until I really know. Mad, yeah, no, it is crazy. Yeah, we managed to get somebody to pass their FDMO funding, and Luke actually a couple of years ago went to do it, passed all the challenges, and then never went through with it. So Luke has gone to do FDMO funding, passed it. I remember him showing me all the emails and everything about it, but he decided against it just because a couple of his friends who do similar things, who are in similar positions as he is, like, you know, 5 years deep into trading, run their own team, whatever. All him and his close group of friends in this avenue are all sort of against it, so he's just not a fan of funding. No alerts really pinging. As I said, this is typical for a Friday or Friday evening. Volatility does just run dry. If you don't really know at your level, make me think I know nothing. I'm just being very specific with it. I just want everything perfect before going to do it. And to be honest, just with everything else there is to do for LAGFX, trading isn't number one on the priority list. Obviously, other things for LAGFX are. We're still doing a lot of stuff for the mentorship program and other stuff with the website and promoting and social media. So until trading is like the number one thing, which I think within a month, 2 months, it will be, because everything else will have finished and I can really focus solely on trading. That's when I look to do it. I just want to be as prepared as possible. Absolutely no need for me to rush into it. What size would I go for? So I'm actually looking to go through Ment funding. So LAGFX's funding. I'm not looking to go through FTMO or any of the others. I'm looking to do Ment's funding. Plans. Potentially it's either going to be the 200,000 or the 400,000 account. One of the two. I think that's fair. I don't really personally see the point in doing like a 25,000 account. It could be worthwhile, don't get me wrong, but I think if you're going to go for it, you should just prepare and then go big. But I think we can expect to see me on a funded account by the end of the year. Up to 1 million, up to 2 million. He's just come out with a 2 million account. $2 million account. But you have to pay $15,000 up front to even do the challenge. Which is insane, but you keep 75%, so if you were to make 1% back on a $2 million account, that's 20,000, and you keep 75%, so that is 15,000 from 1%. You make 15,000 from 1%. It's insane. And say that even last week, yes, there was potential for 50, even you had 10%. 150,000 in a week. It's insane. What firm you guys recommend? Completely individual based, whatever thing works for you. I personally have followed LAGFX for a long time, so when he came out with his funding program, that interested me just because it's designed for smart money traders. But honestly, just whatever you like, whatever fits your strategy, you go for. Let's see what Euro US did. Yeah, it's been slightly hesitant. It's been a bit funny. Obviously, just because there's such a little volatility, it's undecided. Like, I won't be looking to place anything now, just because the markets will disrespect laws slightly more readily. Great British Pound Australian, we'll take one more look at this. See what this is saying. We've had a retracement, not fully, all the way down, potentially tapping into a zone in here, although I would have preferred it to tap this. So we'll just see. Price hasn't obviously continued higher just yet. We have definitely displaced though to the downside. This being a protected low, we have displaced now. Yeah, 100%. The difference is with a 10k, if I fail, it's not that much to lose. Yeah, exactly. I'm not sure with FTMO how much you have to put up for 10k, but like with LAGFX for his 25k, it's like $250, like 200 quid. So yeah, I 100% get where you're coming from. If you only have to pay like £100 up front, it's less risk. And if you fail, you fail. But my mindset going into it is that I want to be at a position where I'm 99% confident I will not fail once I start. And obviously I'm getting closer and closer to that, but you know, we have to remember trading is a game that does take years to learn, and there's no need to rush it whatsoever. I think we're going to actually change the music up slightly here, just because that's getting a little bit wild. Go back to some more chilled. There we go, that's better. 10 is like £130, yeah. Then with the profit from the estimate, yeah. You know what, I was just thinking that, funnily enough, I was just looking at LAGFX funding. I was saying it's probably good for people who don't have that sort of spare cash to just throw out. It would be so much easier to, yeah, as you say, start on a lower account, allow yourself the opportunity to profit with more and have those profits be relevant, and then use the profits you gain from that then to move on. Could definitely be a good idea. Maybe that's even something I might try myself. Obviously you risk less, you're only risking like £130, but you can really see, because it's different when you're on a different platform trading like for a prop firm. Regardless of how big the account size is, there's obviously going to be some psychological effects within that. So I think it probably is, as you say, worth just doing a small one, just to see how you cope with it, how you react, get some experience with it, and then once you have, you know, use your profits to then look at the ones higher up. That's my thinking when I think I'm ready. Yeah, I'd say 6 months. Yeah, I think that's also why it's great for the person who passed in the VIP chat, is like, there's always that backup where if they're not seeing anything, they could potentially see if me or Luke have any potential entries we're looking at, and then it just covers them. So it's definitely worthwhile. I also just have a funny thing to run by. In the future, me and Luke want to expand LAGFX into different avenues and have like a gaming side of it. Because obviously sometimes in our spare time, me and Luke will play Warzone and other games. We're potentially looking at starting to stream some of those, like creating a completely separate channel to just stream games. I don't know if you're into gaming at all, Ben, or video games, or if that's something you'd be interested in seeing or watching. But I'd say like a couple times a week we go on for a couple hours and we play, and we just thought it might be funny to stream it and let people have that insight into us and what we do. But yeah, at the moment, Ben, obviously, I believe you said like you're working full time, so trading's still like a side hobby for you. There's absolutely no rush for you to get funded. I know there is always that thought, like, you want to be able to start making money from this effort you put in, but just stick it out. Just stick it out. Keep going. Keep going. You'll be surprised how much you constantly can keep learning with trading. Like, I'm still learning all the time. It's so hard to ever be at a point where you can say, oh, I'm amazing at this. Like, there's always new learning curves. There's always a new market condition that comes your way that you're unfamiliar with, that you need to try and understand how to tackle. So preparation is everything. And a new Trading Couch episode has gone live at 5 PM, titled How You Can Make £2,000 a Week Trading Forex. So I used to, but since I started looking into trading, it's been yeah. I used to, but oh yeah, no, that's great then. I'd say if ever you get the chance, then Ben, I'm not sure, like when you're ready to use like funds, it could be an idea then for you to just sign up with AxiTrader, obviously the one that we're affiliated with, and then we can get you in there on the VIP price, which is pennies really, £20 a month, £5 a week, which isn't really anything. You know, you can spend it on a coffee every week, and then at least you'll be able to, when you go to do your funding, be able to use some of the potential entries to help you get through it. Obviously you don't have to by any means necessary, but just an idea. I'm actually going to wrap this up soon. We're 2.5 hours in, but I think the best thing, anybody who's here, go and check out after this the new trading couch video on the channel. That's quite a good one actually. We talk about how you can potentially get to a point where you can make £2,000 a week from Forex. The reason we came up with that is because Luke had a £2,000 day. When was it? Yesterday? There was literally the profit sheet in the chat just from the Euro Australian sell. He had a £2,000 day. We just wanted to sort of explain how he gets to that point, how you can get to that point, and our tips. So quite a nice one. Quite a nice one. We filmed it not long ago. And Ben, if there's any topics actually for the trading couch, any ideas you have for that, then let us know. We're sort of running dry. We're now sort of having to go off topic from Forex. We feel like we've covered everything there is Forex related, because obviously when it comes to teaching Forex, you need to have the markets in front of you. But with this, we want it more of like a chatty thing. So we're thinking to sort of deviate away from Forex things and give people the opportunity to see what we're like, really. But yeah, we'll look to wrap this up. I've got quite a bit of stuff to do before the end of the day, so it's not like I can even stop this and go rest. I've got quite a bit of stuff to do, so yeah, we'll round it up. Hope everybody has enjoyed. Once again, hopefully you've managed to learn a few things in this when I've been doing analysis or back testing or showing you how I'd be looking for entries in different regions of the markets. My idea on what I want. Yeah, no, 100%. Yeah, definitely. I mean, it's not a bad way to go about it. You know, you want to understand that you don't want to have to rely on something else to pass, because then when you have the account, you know, you want to know to pass that your trading alone can get you through it, and if so, then you can start following like other things again. No, I completely agree, and I'm the same. I won't be following anything else when I look to pass. I need the confirmation that I myself am confident in my own abilities to be able to pass it. But now I completely understand that, respect that. Yeah, as I said, probably going to look to wrap it up now. Any final questions, let me know. Anybody who's new in here and doesn't really follow us and anything, make sure to subscribe to the channel, turn on notifications, just so you understand when we're live. Obviously, I haven't been doing much trading in this session because it's Friday, not much volatility in the markets, but when it comes to next week, we'll look to do some proper sessions that you can get an insight into. But for now, I appreciate everybody watching. Any final questions, as I said, get them in quickly. But if not, we will look to see you all next week. Exactly. Yeah, no. Definitely the best way to go about it. 100%. Oops. Oh, at least I accidentally pressed space, which seems to change the markets. But we can see that obviously price has reacted from that zone. Good stream though, been here since the start. I appreciate that very much, Ben. I appreciate that very much. All this support, honestly, it does mean so much. So I appreciate it massively. I am also away Saturday, Sunday, which is why I've got a lot of stuff to do tonight. Get everything done that needed to be done over the weekend tonight. I'm away Saturday, Sunday. We'll be back Monday. I am still available, so if you have any questions, you can still message me and I'll get back to you. I will have Wi-Fi, like I'll still be able to chat. But yeah, it seems like there's no questions. It seems like nobody has anything pressing. So yeah, we'll look to end this. Thank you, Ben, and everybody else in here. And yeah, I will speak to you all and see you all later.